Recent developments in the global cryptocurrency landscape highlight a complex mix of regulatory changes, market volatility, and institutional dynamics shaping the industry's future. Notably, Europe is set to introduce risky leveraged ETFs that allow investors to gain 3 times exposure to Bitcoin and Ethereum, expanding speculative opportunities but also amplifying potential losses amid a melting crypto market. As prices decline, investors face heightened risk associated with these new financial instruments. Meanwhile, in the broader market, Bitcoin shows signs of entering its most bearish phase since early 2023, with analysts from CryptoQuant warning of fading demand as Bitcoin nears a critical support zone around the $82,000 to $79,300 level. A key point below which panic selling may intensify, especially among short-term holders sitting on deep unrealized losses. Data indicates that institutional flows have plummeted by 90%, signaling an environment of waning interest from large investors who once flooded the market in August. On the regulatory front, the Argentine Congress has published a groundbreaking report suggesting that President Javier Milei's promotion of the Libra scheme warrants investigation for misconduct, signaling increased scrutiny of governmental involvement in crypto projects. Similarly, in the United States, federal authorities are probing Bitmain Technologies over national security concerns linked to its mining equipment, while other investigations focus on the risks posed by Chinese manufacturers. Amidst these regulatory and market pressures, innovation continues. VeChain's recent approval under the EU's markets in crypto assets MiCA framework for its VET and VTHO tokens marks a milestone for regulatory clarity, paving the way for expanded adoption. Asia's regulators are also shifting towards pro-innovation, risk-based approaches rather than broad bans, an encouraging sign for long-term growth. Investors are also closely watching potential changes in market momentum. Some industry analysts suggest that despite a recent decline pushing many altcoins into oversold territory, the traditional alt season is unlikely to return in its old form. Instead, expectations are shifting towards a hyper-accelerated regime characterized by quick boom and bust cycles lasting just a few months, contrasting sharply with earlier years' prolonged rallies. On the price outlook, Bitcoin remains volatile near the $84,000 range, with technical signals indicating a possibility of further declines if critical support levels break, potentially testing $79,300 or even lower, which could trigger significant liquidations. Conversely, rising odds of a December Federal Reserve rate cut, now over 70%, are fueling optimism that liquidity might return, possibly sparking a relief rally in the digital asset market. In terms of institutional moves, major players like ARK Invest are increasing exposure by buying Bitcoin ETFs and other crypto assets.